Good morning, traders. Today is Monday, the 6th of September. My name is Neville Hornsey, market analyst for YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing? Got a new house?
Well, not in my new house just yet. I'm staying with some family for a couple of weeks because we couldn't get the move-in dates to align fully. So on the 25th of September, that's why I'm moving in. I'm very excited.
Yeah, nice. So are you buying or are you renting?
Just renting.
Yeah, because they were saying that renting has suddenly become cheaper than buying. Like the last few years, it was like cheaper to get a mortgage and pay off those sort of monthly payments. But now renting's gone back to being cheaper. So it's a renter's market. So that's all good.
Definitely. Like rents for the first time, I think in years, probably definitely first time I've ever known, rents have definitely gone down. Like we took advantage of that.
Yeah. So you're still in London, yeah?
Still in London, yeah.
Yeah, and
going to be based in Wimbledon.
Yeah, so I mean that's premium area. So like, do you think it's just generally a supply and demand issue? Like people have just left, so the people with rental properties are sort of desperate to get you guys in.
Yeah, I think it's just there's been a bit of an exodus from the crowded places with the smaller homes, and it's all about this demand for bigger spaces, I think. During the pandemic, people realizing that they're going to be spending in the future, they're going to be working perhaps 3 days from home and only going into the office twice a week. So why be crammed into a little expensive flat in the middle of London if you're only going into the office twice a week? Why not move somewhere, commute about town or even further afield and get a nice bigger space with a garden and all that kind of stuff? And that's just, it's just the demand for, I think, a lot of the properties around here. Definitely from a rental perspective anyway, the rental demand has gone down. So it's definitely, got cheaper.
Oh, well done. It's good times.
I know.
Yeah.
It's not saving us that much money, but it's gone, maybe it's saving us about 10% on rent, which is nice.
Yeah, but like when I moved into a flat in like central London, we said, just give it a year. And then like 9 years later, we were still there because the guy had never put the rent up. He just like said, I'd rather have he wanted sitting tenants. He didn't want to have to mess about with. But then it got to a point where it was just like, all right, guys, I'm kind of like a decade behind on the inflation sort of curve. I need to double your rent. It's like, all right, see you later then. Bye. It's just like, not paying that. Yeah. So you never know. You might be, 10% saving now might actually turn out to be like a big one later. Fingers crossed for you.
Yeah, we'd like to stay in this place for a couple of years, definitely.
Yeah, cool. All right, so what else is going on then? Like it's Labor Day in the US and the calendar today looks pretty dead. So
yeah, today, nothing today. It's going to be boring, sleepy. Like you say, US Labor Day, no US market participants are in today. Also, the weather's great in Europe, so the Europeans are probably going to want to get out early and enjoy the what could be a final hurrah in Northern Europe in terms of summer. But things definitely getting more interesting from Tuesday. Like we were talking about this just before we started the video, but it's just central banks galore this week. RBA on Tuesday, BOC on Wednesday, ECB on Thursday. There's a couple of EM central banks as well. I think it's the Poland and Russia central banks. And then there's quite a bit of data as well, like Canadian jobs at the end of the week, US PPI, and like there's UK GDP. I think was there Canadian GDP? Might be getting that wrong. But yeah, that's the main things this week.
Cool. All right. So where do you want to start then?
Yeah, let's go through the usual charts and just have a chat. I'm going to start with S&P 500 if you want.
All right, so looking at the S&P 500, I've got
4,550
as the sort of top. And I guess that just might as well say 5,000 because it looks like it's going that way.
It does. Yeah. Market's very happy at the moment.
Yeah. Jobs payrolls obviously totally missed expectations. Market didn't seem to care so much. Obviously, today's just going up on vapors. Obviously, no one's actually trading it. It's just grinding higher, just because that's the way it goes. But it'd be interesting to see if they come back on Tuesday, pull it back down to this 50 EMA because that seems to be the usual.
Yeah, I don't know if there's a catalyst for that just yet, because the jobs report Well, I mean, weak data is good data for equities, isn't it? Because it means a more patient Fed. So, yeah, I think steady grind higher to continue for now, unless something changes on the pandemic front, something gets really, really much worse, or the data takes a significant turn for the worse. But we don't have too much US data this week, apart from PPI, or something to do with the Fed being hawkish. That could trigger a correction. But other than that,
yeah,
grinding.
On a slightly macro sort of chit chat, today, Labor Day in the US, is the day that the Fed and state benefits all run out now. So that's it. All of the sort of pandemic emergency unemployment benefits stop today, don't they? So that's like a load of, well, a few million people without any extra income coming in. So that be a lot more people maybe looking for a job, do you think, next month?
Yeah, I think that is a potential. I think I also saw some economists writing about the fact that it could hurt demand. So we're not really sure how it's going to affect the US economy. So we're just going to have to wait until we see the September data, really. So we're going to sentiment surveys out in the middle of the month and the latter part of the month, which will be good. And then eventually we'll get like retail sales and other stuff, and the jobs data at the beginning of October. So yeah, that'll be for the US, aside from obviously the September FOMC, which is later in the month. The September data is going to be really important, like you say, because of the unemployment benefits expiring.
Yeah, because I was thinking, like, benefits expire. Just say everybody that should be getting a job gets a job. That means there's like a massive supply of people looking for a job, which means that payroll report where they sort of showed 0.6% wage increase, I think it was. Surely the wages come down. Surely that means people are earning less money, which means retail sales comes down. Surely FOMC September, no taper, and maybe not even in November.
I don't think. I think September definitely not. I think maybe in October, or maybe they give a hint in October, and then maybe they do it by the end of the year. I still think they're probably going to announce it by the end of the year. That seems to be the guidance that they're giving at the moment. They're not being any more specific than that.
And it's kind of good to see the revision from last month go up to 1 million. So maybe because another thing is 200,000 new jobs pre-pandemic was actually a good number.
It was massive. Yeah, it was. And like you say, the revisions. So this jobs report looks bad because there was a big miss on the headline number. Yeah. But like you say, there was a positive revision. If you take the 3 average of the last 3 months, it's still very high. It's like 750,000 jobs a month on average in the past 3 months.
Yeah.
Like you say, September could be big because people getting off the benefits and realizing they have to get a job again.
Yeah.
And I mean, to be honest, September's probably going to be disinflationary as well, because less people getting money from the government to spend on things should take pressure off just general prices. Yeah. And then also more people fighting for the same number of jobs should push wages lower. So,
All right. So I think, because the whole talk was about Jackson Hole being like a pivotal moment in time. But I think this jobs data has now really sort of made September, the month of September, all the data that comes out in September, I think will set us up for the rest of the year. So
I think that's really well put. I think that's really well put.
Cool. All right. So RBA comes in tomorrow, RBA statement. Australia seems to be a bit of a mess. Did you see that guy talking about a dual economy, the economy of the vaccinated versus the economy of the unvaccinated? Do you see that?
Who was talking about that? One of the Aussies?
Yeah, one of the guys from Victoria, like the state of Victoria. He was sort of saying, like, you guys that do not want to get vaccinated, that's your choice, but you will not get access basically to the workplace, to the healthcare. You know, basically, like, if you want to be like unvaccinated, that's your choice, but you are not getting, we're not going to look after you guys. If you're not going to look after yourself. And I was just like, oh my God, that's like a dual economy. It's like the haves and haves not, but in terms of,
I know, but like, it's a bit, the Aussies are getting a little bit like, we didn't want to take it that far in this country, did we? Because it was a little bit dystopian, but the Aussies they've been hardcore and authoritarian throughout this pandemic, haven't they? So it's not really surprising.
But like, if they're whole GDP, that was rising, and that's great for the Aussie, obviously, the actual currency pair. But if they're worried about the RBA, from what I could gather from the last statement, was saying that the Delta variant's really impacting on the economy now. But if they're going to like stop people from basically enjoying the whole economy, say it's 50-50 split, that surely that would affect the GDP of the economy by 50%. Like, I don't understand.
I guess it could. Yeah, I think the Aussies are they're a bit behind us, the UK and in the US, in terms of their understanding of the virus. Like, soon they're going to learn that the vaccine doesn't mean that you can't get infected. And it doesn't even necessarily mean that you can't be hospitalized. Massively reduces those risks. But I think maybe they're still in that mindset where all the vaccinated people are like 100% protected and they can live completely normal and won't even be touched by the pandemic. But when they realize that actually vaccinated people can get infected anyway, so
no,
you know what I mean? That kind of undermines that two-tier system argument, doesn't it?
Yeah, so basically he'll be, I think economy, the economy will have to like take precedence at some point, because they'll have to allow people to go to work at some point, surely. But maybe not.
Yeah.
All right, so in terms of the actual Aussie, I had it as, on this weekly chart, a bit of demand from here, and it's going back up to test the breakdown from that sort of distribution sort of channel here. But the RBA, do you think they're going to weaken? Do you think they're going to taper? Like they said they were going to stay on course. Do you think they will?
Well, I'm not sure. It's a toss-up, I think. From what I've been reading from the Aussie banks and stuff, some think they will proceed with the taper, some think they will delay it. And that, for me, that means there's potential for like a two-way reaction in the Aussie. So you just got to trade what you see with regards to that. If they do taper as planned, then you could potentially see a bit of Aussie weakness. Although I don't think it's going to be anything too severe, because like we're saying, it's as planned, so it wouldn't be a big surprise. But if they do delay, then potentially you could see a bit of Aussie strength and a move back towards that area you're talking about, towards 0.7600.
Cool. All right, so that's the RBA. What are you thinking about the Bank of Canada?
It's not really meant to be the most interesting meeting, to be honest. I think they're not going to change any policy settings. I think most people think it's still too early for the next phase of their QE tapering. I mean, they've already been tapering for a little while anyway. I think they need to acknowledge that some of the recent data out of Canada has been a little bit worse than expected. But the big thing for CAD at the moment has been what's been happening to oil. The correlation has been very high in the last couple of weeks. So I just don't see any reason why that would change this week, to be honest.
All right. So for me, Brent crude is in an uptrend. It has been since late August. Obviously, still need to get over the July swing highs, but it definitely looks like it's being supported on the higher time frames. So oil up, CAD up, so dollar CAD down.
Yeah, potentially. I mean, out of the US this week, like I say, it's just PPI and we've got a bit of Fed speak, but I don't think the focus is really going to be on US macro fundamentals this week. It's going to be on more global things. So for CAD, it's going to be oil and BOC. So potentially some room for it to move lower.
All right. And then, all the reports I'm reading, they're all essentially about the ECB and their PEP. So we've got the ECB on Thursday. Obviously, the ECB council is split on whether or not this PEP is actually doing any good. The ECB don't want the euro to appreciate too high because they need to export. What are you seeing?
Yeah, I think pretty good overall assessment, to be honest. Like, with regards to the decision about what to do with the PEP once it expires in March, we're not going to get a final decision, I don't think, on that yet. That could potentially be a meeting later in the year. What we could get, and what I think is pretty likely and markets are expecting, is that, you remember I think it was 2 quarters ago, the ECB increased the rate at which they were purchasing bonds with the PEP to about 80 billion per month from 60 billion. Well, at this meeting, they're probably going to say that they're going to reduce that from 80 billion back to 60 billion. And to be honest, like the data out of the Eurozone's been good, and financial conditions are very favorable at the moment, as in bond yields are low and stocks are high. And inflation expectations have been pushing higher in recent weeks in the Eurozone as well. So they definitely have the room to reduce the pace of purchases without, well, I mean, there's going to be a communications problem. It could come across as a little bit hawkish, which could support the euro.
Yeah.
So it's going to be an interesting one.
With that in mind, supporting the euro, obviously on this daily chart, I'm not saying that the 200 EMA was the resistance, but this swing high, it's a perfect double top, which means there was somebody up there before, obviously with a bit of supply and selling, and then that person or institution was still there, and they like to the tick hit it. So there's definitely someone there, and as soon as they lift that offer, this is going to go a lot higher, a lot quicker. So
potentially,
I guess if they're waiting for the Thursday meeting, if that high goes, I think we go a lot higher, a lot quicker, because someone's been sat there for a while, and when I ever see like equal highs, that to me is like that's a red flag for, because a lot of people say that's resistance because it's confluent with the EMAs, but that's just too coincidental when it's like a perfect double top. Just like I think someone sat there. Yeah, because like if you look to the left, like this little area here, double top there. As soon as they get through it, you get like that big push through, and then on the way down, like near perfect lows. It's so easy to break once they like remove that bid there, just down. So if they lift the offer, it goes up. All right, and that's repeated on the dollar as well. Got a perfect double bottom. So I think the euro actually pushes the dollar index. I mean, obviously it normally does, but I think Thursday might actually break the dollar index. So that'd be interesting.
Yeah.
Either that or we go down to parity. Just like, because that could be like a massive distribution sort of pattern as well.
Down to parity. I don't know if I want to make that call just yet.
Come on.
That'll be fun though.
I remember like when people were calling for parity on the euro versus the US dollar. I mean, never saw it, but
just prior to the pandemic, people were, weren't they?
Yeah. So one of us has got to be right at some point. I'm making a big call.
Yeah. Someday it will probably get there.
Yeah. One day. Yeah. Another thing I want to talk about quickly is the precious metals. We had a big boost up in silver, and gold also found it's triple top sort of scenario. So I think a weaker dollar would sort of favor the precious metals. So that would make a lot of people happy.
Yes, I think it would. And like we've seen in August, the US economic data that we've had so far for August has been worse than expected, mainly because of the pandemic. And that's boosted gold, helped it recover from those earlier August lows, and help push the dollar from highs. And if we do see that continue in September, and if we do see a slightly more cautious sort of dovish Fed as a result, which is a good possibility, then that's a nice recipe for gold to break above this resistance that you got marked up.
Cool. All right, so that's kind of like all the major charts. You got anything else you want to sort of talk about?
Don't think so. We've been through the calendar, haven't we? All the major events.
Yeah. So it's kind of a slow start to the week, and then central bank frenzy.
Yes, literally.
All right. Well, have a great day, and I hope you enjoy the rest of
you as well, mate.
And I'll speak to you next week. All right. Take care.
Yeah.